The holidays are over and I'm on vacation this week, so I'm back. Really quickly, I do want to make a little note here. My account is up 5.4% from last week, which I'm actually pretty happy about given that AMC's trading range has been so tight lately. Let me just zoom out to the day and turn on my my daily chart drawings. And you can see that there just hasn't been a lot of movement going on, right? Let's see here, 1, 2, 3, 4, 5, here we go. I mean, this candle almost described the entire week, right? I mean, yeah, the price left that trading range once or twice, but generally we stayed within it. And that was a really tight range, right? What was that low? 27.01 and the high of 29.39. That's tight. You know, $2.38 of trading range when the price is up in the 23s. It's like a 10% trading range. My account's up 5%. So, I mean, that's a win for me. I like that. I'm always looking to just increase my account a little bit at a time. Small gains over time will always win. And that's what I want to do, is make these small gains. I'm going to go ahead and start my analysis here on the daily chart because this is just where I'm at. And I want to talk about let's have a look here, trend lines in general, okay? So you're gonna see here that I have this dashed line, and this is an internal trend line, and that means that it cuts through some of the price, some of the candles. To do an external trend line would be to take this trend line to the very top and then not overwrite any of the price, and that would look like this, okay? So I do want to talk about how Bulkowski has, in his book, Chart Patterns, Getting Started in Chart Patterns, he has this 1, 2, 3 trend line test method, and I've been using it and it's been really effective. He says the first thing you do is draw an external trend line from the lowest valley before the highest peak and leading to the highest peak on the chart such that the trend line does not overwrite any price between them. So I'm gonna go ahead and do that, right? I'm gonna do this first step. I'm gonna show you. Okay, here we go. So I'm gonna take this trend line and I'm gonna take it to the bottom of that candle, and this is the uptrend, right? And it says to the highest high, right? So that would be way up here. And this is an internal trend line because it cuts through the price. Now what I'm going to do is I'm going to pull this line down to the right until it becomes an internal trend line so that it doesn't overwrite any of the price between those 2 points. And that's right there. That is what that trend line looks like. This was our upward trend, the bounce trend. This is what the bounce was. This was it. I'm gonna make it green because that makes sense to me, right? Now, the second test is that the price should attempt to climb back to the price level of the highest peak, but not exceed it by much, if any. And we did see that, right? This candle here, you see this big, tall wick. I remember this day. This was pretty rough, honestly, because the price was so volatile. And I was not well prepared. I was busy at work and I was distracted, so I didn't make many good trades here, but I did come out on top. This price did come up to just about where that breakout price was, a little bit above, and then boom, came down and closed even below the trading range of the day prior, or at least the body of that candle. And then Bulkowski says the price must close below the lowest valley between those 2 points. That is the test of the trend and the breakout price. So the breakout price was somewhere in here, right? Towards the high 28s, and the test was up here, and that high was 29.74. And when the price closed below those 2 points, the uptrend was confirmed to be broken, and that would be right here at this candle. So I'm gonna drop a little arrow here, right there. That was the 29th. From the 29th, that bounce uptrend ended, and that was it. And you can see what the RSI is doing here over those few days. It's really not moving above 45. This is very bearish. The bulls had a couple of opportunities, all right, here and here to bring the RSI higher, more into this, what I call the coiling zone where the price coils, and they just failed to do so. You can see that the volume has been pretty low. This yellow line here, this is the 30 period moving average, all right? And that's not quite, that's just more than a month of trading, of course. You can see volume has been pretty low relative to that. And the implied volatility has been decreasing. This signals consolidation, that the price has been consolidating from about this point onward. This upward trend, this is just a consolidation, a bounce. This was not the start of a new trend much higher. And there was this potential inverted head and shoulders through here. I know a lot of people were watching that. But the thing is about those kinds of patterns is they have to confirm before they become valid. And here that confirmation would have been a close above this neckline, which we didn't see. In fact, the price didn't even come close to that. And now the inverted head and shoulders would be asymmetrical, and so it's not really something I'm even looking out for anymore. I've been watching a descending broadening wedge, and I might pull that up too. I got a lot of charts to go through. So here we go. This 1, 2, 3 trend change method found in Bulkowski's book correctly forecasted when that bounce trend ended. And I've been using that trend method a lot recently, and even on the 1 minute chart, to successfully be able to trade. So what happens now, right? And now I'm going to be looking for downtrends to see if we've broken a downtrend. So I'm going to take the last minor high right here, and I'm going to go to the lowest low, which might be today? No, I don't think it, I gotta look. Let's see here. The markets are still open. I just don't think that we're gonna move much for the rest of the day today. This low was 26.62, and today we're almost setting a new low, 26.62. Oh, this is a critical moment right now. If the price closes below the tail of this candle, that is so bearish. Okay, so I might even turn on the 1 minute chart here and just watch that, record that. I'm going to assume that today hasn't happened, okay? So if I was drawing this yesterday, I would say here's the highest high, this is the lowest low, and I want to draw my external trend line so the price is not overwritten at all. And that would put that way out here, all right? This would be our downtrend. And even if we set a new low today, we're still respecting this downtrend, of course. And I'm just gonna format it really quickly so it looks the same. Okay, so this is the downtrend. And as the price pulls away from this line, the downtrend is accelerating. And we're accelerating towards an area where there is not much support. What do you see below this level? I'm going to draw a rectangle and we'll see what we see. You see nothing. There are a couple of tails and then really tall candles because the price moves rapidly through this area. So to see a close below that 26.66 level, which is a pretty important support level I've been watching, would be very, very bearish, and we really could see a fall to $25 and beyond. Yeah, I'm still not bullish. I'm still not bullish. I don't see it in the charts yet. And Adam Aron's tweet today was anything but bullish. Essentially, AMC today said, hey, to survive, we had to take out a bunch of really bad debt, and we can't afford to pay it off, so we're kicking the can down the road. It's not bullish. It's not bullish at all. So you're also going to see that I have this circle here, and this is essentially this is where I think the price is going to go based on the options chain open interest. A lot of open interest in that I think it's a $24 strike on the January 7th. Was that, what day is this supposed to be on? Yeah, the 7th, which is of course Friday of this week. So I mean, if this downtrend continues and accelerates and we pass through this level, that's very possible to reach that. I'm gonna go ahead and dive into some of my other charts. Let's just work our way down. So let's look at the 4 hour. I'm gonna pull this up too. There it is. So this 4 hour chart shows this downward channel that's been present for a very, very, very long time. It's just getting battered every time the price reaches the top of that trend line. You can see we even had some consolidation here in this symmetrical triangle, the handle of the double bottom that failed and broke down. And that was quite the throwdown. And the bottom of this channel has acted as support before, and what we saw in the last couple of weeks is a couple of tests that have failed, all right? These arrows showing the failure of the price to break out of this downward channel. This is the prevailing trend. And it is really, really tall. And the median point there is shown in gray. I'm gonna make it yellow so that it matches its outer trend lines. This itself could be its own channel. You have some good touch points here and here. I mean, it's sloppy, so I just like to keep it whole and maintained. So this is still the prevailing trend is down. Gonna zoom in a little closer. I am starting to look at the 1 hour a little bit, but I just don't care for it. I use the 15-minute chart, and I just give myself a long time to look at it. Here you can see more detail of what that channel looks like on the 15-minute. I'm gonna switch my drawings now to match the time frame, and I haven't shown this pattern yet, I don't believe. I've been focusing on just participating in my Discord. It's private. I do like to keep it small. So what I see on the 15-minute here is a descending triangle, and this was, what day was this? This was the 30th, okay? We saw this false breakout, and this is what Bulkowski calls a throwback, when the price breaks out and then immediately heads back down. And you'll see that I have a trend line drawn here from this minor low to this minor high, and then when that trend does not overwrite the price, that trend is actually set by these first 2 points here. And there was a great acceleration, and then it broke down immediately, and then it closed out. And then the price moved and closed inside of the pattern again. Incredible stuff. The bulls getting totally trashed there. What a bull trap. The price this morning breaking out and above, moving back into the triangle, and now we're breaking down, and we're definitely going to close outside of that area. That would confirm a downward breakout. The target for that downward breakout is $24.19. Again, it's below $26.66. And there are a few support levels here. There are some Fibonacci retracements, and I don't want to go into any of that too much right now. When we get there, I may address it. But this is the pattern I'm watching, and you can see the implied volatility is falling throughout this pattern. It is simply consolidating, and the RSI is starting to show bullish divergence here on this time frame. That would be bullish divergence, where the lows in the RSI are rising, and I'll show this in a more easily seen color. I'd like to go with red. It's a very good color. Save as default. Okay. So you can see that as the price is rising over 30, that is the oversold area, that the lows are increasing. And what we see in the price is actually a continuing decline in the lows. So where the price is making lower lows and the RSI is making higher highs, and we're moving out of the oversold region, this would be bullish divergence. So it is possible that in the near future, we're going to see a bounce. Like that could very well happen. And it wouldn't even surprise me to see a bounce way up to that trend line again before crashing down. Like that kind of volatility can happen, especially in AMC. AMC is wild. It's wild. Now, just because that's there, it doesn't mean this is going to play out. But on the 15-minute chart, there is an opportunity for a reversal here. But this breakout confirming a downward move, and this throwback would not suggest that that bullish divergence will come to fruition. And there's even a bear flag in here. You can kind of see it. So tomorrow might be up in the air, but I think overall we're still looking pretty bearish. So I'm going to go into the 1 minute now. Change the time frame. Change my drawings. Oh, what drawings am I on? Oh, my 1 hour drawings. I should show this. Let me show you what I was looking at. Okay. So again, you're gonna see some trend lines, right? The incoming trend was down, and it broke. Okay, from that bounce. This was the bounce uptrend, and it broke. And then the price is now just consolidating in here, and we have this beautiful symmetrical triangle. 1, 2, 3, 4, 5 easy touch points. Lots of good distance here between the peaks and the valleys. A very well formed pattern. The height being $13, and the percentage mean price target at 36% would have a downward price target of $23.28. The upward price target would be higher than that, obviously. And it looks like when the triangles break out higher, they have a higher percentage meaning price target, so the price would probably be I didn't calculate it, I don't think. Yeah, I didn't calculate the bullish price target because we've already confirmed that it's broken down. And to support that, the price has even tested that lower trend line of that triangle here. All right, that happened today. Today we confirmed the downward breakout of the symmetrical triangle, that breakout being shown here in the red circle, and this arrow showing where that test occurred. And this move and this, wow, this is interesting. This is confirming the move down, all right? And seriously, that price target is way down here. 23.28. On the, I wonder what that looks like on the daily chart. This is a little candid. I don't want to spend a ton of time editing this. So I'm just going to click around a little bit and do some exploring. $23 would, yeah, that'd put us down here. This looks like another test, and there is of course the opportunity for a double bottom or an ugly double bottom when the price does move that far down, which I think it will. But the RSI looks like it might have a ways to go before it decides to bottom. If the price moves down to $23, you know, I don't think the RSI would be very low. I think the RSI has a long way to go before it thinks about reversing. this could just be the beginning of what I call the Great Dippening. I'm really waiting for another drop like this, where these three tall candles. I really am waiting for something like that again. It just looks like it's gonna be that way. So that's where I'm at. I'm still trading puts a lot, way more puts than calls, and that's just the way it is. So I'm happy with where I'm at in terms of my account. My analysis is going really good. I'm getting a lot out of this book, a ton out of this book, and I plan on posting more videos this week. I might wait until the price makes some more consequential moves, but oh, you know what I didn't do today? I didn't do the 1 minute. I want to go over the 1 minute. And let's see here. Change my drawings. So you can see these are trend lines, and you can see how I use these trend lines to help me trade. So I actually entered some puts at the very top here. I entered puts right there, and I did that with this trend line study. You can just see the way this works. So here was the low I used, and then I used the highest high, and then I didn't overwrite the price, and this is where the price broke out of the trend right there, and then it came up and tested it, okay, and it did go higher, but not much higher. And then it fell, and 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 this downtrend ensued. And what this looked like throughout the day, as I was charting this movement, was kind of like this. At first, you know, the lowest low is here, and so the price looked like this, right? This is what my trend looked like. And the price rose, and then it fell lower, and as soon as that lower low came in right here, I moved the trend line. Whoa, I don't know what happened. That was weird. So every time that a lower low was set, I moved the trend line, and I moved the trend line. All right, and then I moved the trend line, and each time I did that, this downtrend just continued to be confirmed until right there, and then we had this corrective wave. This guy right here, this bounce. And so I got stopped out of my trades right here, and I'm not gonna lie, I did enter in a very aggressive, very speculative put play here, and that burned me pretty bad. So I did take a big hit from the gains I had from the puts earlier, and I did try to trade one more round here and didn't, but wow, look at this breakdown below that 2666 level. This is what I'm talking about. I've been waiting to see this level be breached, and it looks like it's already even come back up and tested, and it's continuing to move down. The RSI is only at, what is this, 32? It's not even quite at 30 yet. This is a big deal. This is a very big deal. The price will try to close above 2666, but this could begin the slide down to $23. And from there, further, I'm sure. Really quickly, I'm just gonna show some of my other charts. I'm gonna turn on the 15-minute time frame. I know, I'm all over the place, right? Like, come on, Cap, get it together. I think it's bulls versus bears. I think here's my descending broadening wedge, and it's pretty well formed. And the target for this pattern is $16.28. That's a major low, and it looks like it's coming. You'll see that we have 1, 2, 3, 4, 5. We have 6 touch points here. They're really good touch points. And the upward breakout, the false breakout of the descending triangle actually formed this touch point here of this descending broadening formation. So, geez, you know, for us to reach this price target way down here, that would be an ugly drop. Just ugly. And I expect if that were to happen, that implied volatility would start to come back up. I really think that we'd see implied volatility come up, and our volume trend would change too. So this is weird, right? To see the volume trending up in the middle of a pattern and then start to trend down in the middle of a pattern. But you know, as I've shown, there are a few different things at play here. Most of these patterns do point downward though. I think I have one more set of drawings I wanted to share. So here's my retrace study. These two levels are from the run. I think it's the entire run from 191 to 72.62. It's not. It is just the run from $8.93, $9, right, up to 72.62. And these retracement levels have been really good. Really quick, I want to revisit the study I did here. I was showing how the price has been moving And in each wave, the time frame has been shrinking, and so was the range in which the price was trading. All right, so you got a certain length and a certain height, and then it decreases every step along the way until it came into the end of November. And I said, look, this thing breaks down right here. This breaks down right here. And I was sure that we were going to see MOAS here, right? And of course we didn't. But the study was good. It didn't obviously show which way the price would go, but it did indicate that the consolidation was coming to an end. And then all of this followed. All right, and this is not bullish. To see the price just lightly trend down like this is a very consistent trend. And while we're here, I might as well look at the weekly chart. Let's pull that up. This is the big one. This is the one that everyone hates. Well, not everyone, but some people who can't handle that the price might drop don't like this one because it implies the price could drop to $7. And yeah, I'm not letting go of that. I'm just not, because you know, how much can the stock be worth of a company that is in debt, cannot pay its debts, and is currently not turning a profit? You know, like, just be realistic. The shorts are licking their lips at that kind of perspective. And I think we're in the middle of this big measured move down, right? And I think at the time I drew this orange arrow, I think it did that 3 weeks ago. You can see that this is playing out. It's taking a little longer than I thought. I mean, that's fine, right? But honestly, that's what it looks like. That's really what it looks like to me. And I want to show you something else too. I have some trend lines. I just don't know where they are. I'm gonna zoom out. I'm gonna open up my blink set, and I'm gonna add another year here. Oh, 3 years. Okay, go max available. Okay, look at this. This is a wild story, right? So I'm just gonna apply that trend line analysis again, really quickly. Here's a high, right? Okay, let's go to the lowest low, which is way down here, and then let's not overwrite any price. There you go. That is a downtrend. I believe this is the best downtrend we have in this stock. It's fairly low sloping, all right? It's just at -12 degrees, so it's a pretty reliable trend. And you can see how that post-January, pre-June price action was spinning. The price was just spinning here along that trend line before it flew up, and now we're in a downtrend. And you have to ask, okay, well, if we're correcting, where are we going to go? And it's like, look, down here in the $7 to $8 region. If the price were to return to this trend, which it may, that's how far it could go. I know that's nuts, right? But that's just what I see. And wow, implied volatility doing crazy things. You see how implied volatility spikes there? I think we're in for another one of these. And this happens to start at around $7. Right? So I'm keeping my eyes open. We haven't seen the RSI do something like this before, at least since June. I think we're going to see the RSI dip into the oversold. Here it bottomed near 22. All right, that's really low. Absolute bears in control there. Let me do something else. Let's take the highest high here, and then let's take the lowest low, and not overwrite any price. And that is the downtrend that we are currently in. And it's crazy, right? It's super low. Let's take a minor low. How about this one? No, let's not do that. We'll take this lowest low here. And we'll go to the highest high, and then we won't overwrite any price in between those 2 points. And when we do that, that's the trend line we get. So let me show you what that is. It's broken. It broke. It didn't even, maybe it's even something like this. I don't know. Well, yeah, that could be the trend there. It breaks down below, it comes up, it breaks out, tests it. It didn't really follow that 1, 2, 3 very well, but it's pretty clear that that trend is over. This uptrend from 191 or 92 to 72, 62 is over. And now we're following a downtrend from 72, 62 down, and it's going to at some point realign with this lower trend line until another uptrend is started. And that uptrend is going to start at the bottom of this candle, and it's gonna have to not overwrite, oh no, I'm sorry, at the bottom of this candle, and it can't overwrite any of these other prices, right? We don't know where the highest high is. If we use that next week here, all right, and don't overwrite any price, okay, that one's already broken. That little uptrend, I think that was our bounce. That's already broken, right? So we're looking for the next high to help us determine where to draw our trend line. At the moment, we can't do that, right? Because the uptrend from that minor high is already broken. So the trend is definitively down right now. This is what the analysis says. Okay, so what's my time like? 25 minutes. That's okay. It's been a long time since I posted, and I wanted to cover my charts. I have a couple new patterns. I wanted to give a quick update about where my account is at, what I'm trading, and yeah, wow, what a day today. Let's just have a look at the 1 day really quick. That's bearish. That is so bearish. So this is a horizontal congestion region through here. You can see there's just a lot of price action, right? So to have the price move down this direction, I wouldn't be surprised to see a breakaway gap and then a big fall, because there's just no support through there, and we have these price targets down in the sub 20s. So that's what I'm looking for, and I think this would be a good opportunity for a double bottom. All right, and that double bottom would confirm when the price rises between the peaks between those two lows, which would be right here, right? So, you know, this is what the bulls want to see, is something like this. And that can happen, it can. I just don't think it's likely. Nonetheless, especially in the near term, I think the price is heading further down.